In this video, traders, we're going to look at recognizing and dealing with emotional trading, specifically worry. Stay tuned. Hey traders and investors, a very warm welcome to you. Okay, so trading from a position of worry is never a good thing. And I want to focus today on a few things we can do to eliminate that fear, that worry, that concern, however you want to label it in trading. Because if we can get rid of that, we're going to trade from a much calmer place. And before we go into it, there's scientific proof, guys, that we use a different part of our brain when we're emotionally charged as to when we're not. So you cannot expect to make the right trading decisions when you're trading from a position of specifically of worry, because fundamentally you're using a different part of the brain. And so you need to try and get back into that cool, calm state. All right, so number one, first thing to do is write down when worry sets in. So let's go into this, and what do I mean by this? I mean, when do you start to panic? When do you start to feel concerned? When do you start to trade a little bit more anxiously? There will be a list of things. They might be, hey, when my market that I'm trading goes below support, I haven't come out of a position and I don't know what to do. That could trigger worry. When my stock gaps up or gaps down and I haven't accounted for it, then I'm worried and I'm panicking. When I add too much size to my position and it goes against me and I feel trapped, then I'm worrying. Okay, now we know in a perfect world, you would never get into these situations in the first place. In a perfect world, your trading plan, your stop, would have got you out. You wouldn't have got into so much size. But hey, we're in the real world, guys. We make mistakes. We sometimes put positions on that we shouldn't do. We sometimes take too much size on. We sometimes move the stop. We sometimes don't put a stop in. These things happen to us as humans. This is what it's all about. So writing down specifically what triggers you into thinking, oh, beep. What makes you think, uh-oh, this doesn't feel good. I don't like this at all. I want to get out of it. I'm going to get into kind of protection mode. I'm playing defense now. This is not what I wanted. If I get out of this, I won't do it again. All that kind of internal self-talk that you do, writing them all down. And there'll be ones for you. There'll be different ones. They'll be like, whatever it may be. Most of the time it's in a position that's going against you that you don't really want, and that could be, like I say, a gap that's come out. You've held something, so you've held a currency pair over data and you said you wouldn't. All of a sudden now you're down 100 pips, it's way past, you don't know what to do about it. So these things, just writing them down, and if you need to go back at your journal, you need to go back and look at your trade to see what was happening, then by all means do so. So once we've done that, we move on to number two, which is devising a structured and strict plan for each scenario. So we don't want to say, well, don't get into the first place, always put a stop in. No, we want to have a backup plan so that if you get into the scenario, let's say you get into a scenario where, hey, I've bought a trade, or I tell you what, a good one, which is something that used to get me all the time. I have bought a breakout, or I've faded a breakout, and the market's just drifting up. It's creeping up, it's creeping up. It's so slow. I still think the breakout is not going to go. It's not going to go. I'm still short. I'm moving my stop. I may be adding to the position. I'm just getting myself in a hole. This thing's comes down again. Not quite enough for me to take any off. Creeps up again. This time it's going higher. I'm now stuck in a situation where it's way outside of my plan. It's way outside of my remit, and I don't know what to do about it. I'm concerned about the trade. A good example from me from years ago, getting caught in those kind of fade trades that didn't work and not recognizing it early enough. So let's use that as an example now. Let's learn from it. Devise a structured and strict plan for each scenario. So if you get yourself into that scenario, what's the first thing you do? Now, this is not kind of, okay, reanalyze it and think about it. This is a definite thing that you must do. And it will be something like, cut the position in half straight away. No thinking about it, because what you don't want to do is give yourself too much and say, we'll just cut the position, because we know we should do that, right? But we're not doing it because we're getting ourselves into that position. So doing something, cut the position in half, put a stop in immediately 30 ticks above your position. So at least you kind of framing it. So you reduce some of the worry. You're not like saying, okay, well, this thing could go up to the stratosphere and I could get caught and it could really damage me, like damage limitation. Worst case scenario now is I've lost half of this and I've got a 30 tick stop, or whatever the scenario may be for you. Then what am I going to do? I'm going to now put limit orders in here, here, here. So you've got a very key structured plan for each scenario. If that scenario is, hey, the market's gapped up and I've been short and I'm stuck, I don't know what to do about it, your plan could be exactly the same thing. Cut half the position, put a stop in X amount of pips up. Do something, make some action that's going to eliminate some of that worry and reduce some of that worry. And then you can work to not getting in the situation in the first place. All right, number 3 is monitoring how well you're sticking to these rules. So when these worrisome situations occur, how are you sticking to the rules? If you're not sticking to them, you need to rewrite them because they're too much for you. It might be something like just take off 1/10 of the position. Just do something. Make an effort to rectify what's going on, or limit the damage. And maybe taking half off, for some reason you don't do it. Whatever it is, it's like do something. Put a hedge on. Put a hedge on something, another alternative position on a pair trade. Like if you're long on the Dow, go short the S&P, half position size, or something that starts to at least get you out of the cycle of worrying about it and acting from a worry position. Oh, I'm going to lose loads of money in this, and you're not acting in your best interest. So monitor how well you're sticking to the rules. And then kind of part of the thing we just alluded to here, 3 and 4, this is like a cycle that we're just never ending going around. Adjust, refine, and improve. So adjusting the rules, refining the rules, improving the rules, getting better and better and better. So ultimately our goal is when we get into a position where we are potentially trading from an emotional perspective, we have the plan, the strategy, the structured method in place to come out of that and back into a centered, focused approach to trading. So we're using then the correct part of the brain. We're not using the fight or flight part. We're not making decisions based on emotion. We're using them based on logic, based on our structured trading plan. But getting out of that mindset is the key thing first. It's all very easy to say, oh yeah, we'll just do it. We need a set of rules, a plan of action that if we get into it, how we get out of it. And then ultimately our goal is to not get into it in the first place. But if we do, we have a plan that we know works to get ourselves out of it. And most importantly, so that we limit any damage we do to our trading account, because this is the kind of thing, guys, that can wipe us out. A couple of these bad things, trading from an emotional perspective, adding to positions, moving stops, getting stuck in it, suddenly flipping from kind of logic to emotion, that can do some damage to our trading account from a financial perspective and from an emotional perspective. All right, guys, hope you liked the video. See you next one. Take care. Keep risk managed, whatever you do. Goodbye.